You've been warning investors of an epic multi-asset bubble since last summer. Are you still feeling the same way, and are we getting closer to the crash?
The peak of a bubble is always hard to get right. The market doesn't peak when things begin to look bad. The market peaks on one of the most optimistic days. I think the degree of optimism in some ways measures the most in February, March, where the real crazy stocks in the US did the best, when Tesla was hitting 900, where all the SPACs were going crazy. Now they've cooled down considerably, where Bitcoin was at 60,000. So I would say most bubbles start to let out the air, starting with the craziest, most optimistic stocks. There haven't been many great bubbles, obviously, anywhere. They're quite rare, but we had one in 1929. We had one in 2000. And we kind of had one in 1972, the so-called Nifty 50. Well, all of those were preceded by unusual events, and that is that the very riskiest stocks underperformed the great blue chips. And in 2000, in the great TMT bubble, the crazies peaked in March, but the S&P had a second high in September. And between March and September, the crazy tech stocks were down 50%. And the rest of the market, about 70% of the market cap, was up 16 or 17 to balance the books. And the S&P was unchanged, but the blue chips were up. And that kind of environment where high beta stocks underperform as the market goes up is pretty well unique to late stages of the great bull markets. And we're beginning to see that, perhaps. Now, it all may change and that we may have another great surge of growth stocks. And this phase in 1929 went on for 8 months. In 1972 went on for almost a year. And in 2000 went on for about 7 months. And now we're about April, May, June. We're about 3 months into this period where the highest beta stocks like Tesla are not doing as well as the blue chips.
What could possibly trigger the correction? The Fed's tapering?
The great bubbles often have no trigger. Nobody knows what triggered 1929. Nobody really knows what triggered Japan in 89. Japan was the biggest equity bubble of a serious market in the history of man. There's a level of optimism that just can't be maintained. They push the stocks up by increasing leverage. Margin today in America is back to the high levels of GDP that it was in 2000. And once it's past its peak, you can't maintain the pressure. However, I firmly believe that the Fed knows very little about stock market bubbles. It hadn't got a clue in 2000. Alan Greenspan talked about really the permanent internet profit margins staying forever, and the market would have very high PEs forever. And it's had it higher than average, but it couldn't maintain them at 35 times earnings from 2000. So despite his enormous support, the market cracked. The NASDAQ came down an astonishing 82%. The S&P came down 50%. And then Bernanke had enormous confidence in the US housing bubble. He said the US housing market merely reflected a strong US economy. He said, quote, the US housing market has never declined. And yet the housing market was a 1 in 100-year event on the data. How is it that Greenspan could miss that bubble? How is it Bernanke could miss the housing bubble? They always do. They haven't got a clue about investment bubbles. They don't take them into account. They underestimate the pain of the bubble breaking. And here we are for the third time with the same policy. And each time they're confident right into the crash. And even when the crash starts, they tell you how short it's going to be, how relatively painless it will be. And they are totally wrong. And this guy will be totally wrong, just like Greenspan and Bernanke were totally wrong.